You have more control over real estate. You talk about real estate compared to a stock portfolio or a 401k or buying cryptocurrency. You're just investing your money and you're hoping that other people, other experts can manage that for you. And you're banking your future on the fact that you hope that they're doing the job well. Welcome. This is the first episode of Peter's Property Podcast. This is a podcast that is going to teach people how to create generational wealth in real estate without leaving your daytime job or affecting what you do during the day. A little background on me. My name is Peter Fondini. Professionally, I was trained as an accountant. I was controller for technology companies for about 2.5 decades. Invested in real estate back before the turn of the century and built that business up and eventually left my job. I'm doing this podcast because, in my opinion, one of the biggest problems we have in the United States is people's lack of financial education, their lack of getting good training and good knowledge as to how to get ahead in life and fix things financially so that they're not generationally doing the same thing over and over and over again, making the same mistakes that other people in their family have done, or learning or trying to learn by trial and error. So that's why I'm doing this. The basic premise of this is we're going to teach you how to, over a period of 9 to 12 years, we're going to teach you how to buy one multifamily piece of property every 2 to 3 years. And at the end of that time, you're going to be able to set yourself up and your family up to change things for the rest of your life, for whatever you want to do, and potentially create generational wealth that you can pass on to other people. What we're not going to do on the podcast is we're not going to be like other people out there who teach different ways of getting involved in real estate. We're not going to be telling you about syndications. We're not going to be telling you about you should never have any debt. You should never use anybody else's money or leverage to buy a piece of property. It should be cash only. This program is for the everyday average person. The average rent in the United States is $1,631 as of November 2025, according to the U.S. government. The average salary in the country for the same time period is just under $64,000. So if you take and you follow our program, what you're going to see is you'll have approximately 9 units of property in that 12 to 15 year time period. And you will be able to generate a monthly income that will be double the amount of the average salary in the company. And we'll go through all of that as time goes on, as we go through this podcast, and show you exactly how to do that. So that's why we're doing this. That's why I'm very excited about this. I see people struggling financially all the time in their lives, not being able to do the things they want in their life, not being able to pay their bills sometimes, living with family members. And it's painful to watch this. So that's why we're doing this. We have a passion for this, to helping people better themselves and better their lives. To start this off, I'm going to talk about 10 reasons why I think real estate is the best investment out there in the marketplace currently. First one is you can build long-term wealth with real estate. Real estate appreciates over time. You get tax advantages with real estate. When we compare this to other types of investments, that are different. I'm not saying that one is better or worse, but I think real estate is better. You have more control over real estate. You talk about real estate compared to a stock portfolio or a 401k or buying cryptocurrency. You're just investing your money and you're hoping that other people, other experts can manage that for you. And you're banking your future on the fact that you hope that they're doing the job well, as opposed to taking control of your own destiny. An advantage that real estate has over a lot of other investments is you get leverage. You get to use other people's money to buy these assets. And the bigger piece of that creates generational wealth is when you pay the note or the mortgage off, you still have the asset. It still produces income. And the value of that asset will continue to go up, and the value of the income continues to go up. Real estate income generates cash flow for you. It creates cash flow for you while you're running it before you pay the debt off. So you get to take that extra cash flow and you can do multiple things with it. You can either reinvest it into the property, maintain the property, increase the value of the property. You get to take that money and put it aside and buy another piece of property and expand your wealth. Use it to pay your expenses or do other things like put the kids through college or buy a second vacation home, or anything else you want to do with it. You can donate money to things. You can donate your time to things. You can do whatever you want with that money. Everything else that you do, your job or another business, it's trading your time for money. Real estate allows you to multiply that and generate income for you and generate wealth for you while you're doing something else without impacting it in a negative way. Another advantage for real estate is tax advantages. You get to take depreciation. We'll talk about this later. There are certain codes in the IRS code that allow you to do this. You can offset other income with expenses for real estate. These are other advantages that people don't get in most other businesses. Number 6, it's a hedge against inflation. Real estate, unless something drastic happens, generally goes up in value. Over the last 50 years, real estate has gone up an average of 2.8% across that time frame. Inflation goes up, inflation goes down, recessions go up and recession comes down. Real estate has been very steady over that same time period and is a hedge against that. Number 7, demand for housing. In the United States, people are still looking for places to live. That demand is growing. New construction in many areas is not keeping up with the demand for housing. And as things change with different generations, if you move from the generation from the 1950s to the 1980s, where the big push in the United States was for everybody to own their own home, and you now move into the millennial generation and generations after that, they're not looking to own their own homes. They're looking to live their lifestyle in a different way, which means for people in the multifamily market, there's going to be more opportunities there as there's going to be more demand for that. Real estate can be recession-proof or even recession-resilient. There's different types of housing stock out there. I'll briefly explain those. A-class properties are new construction properties that are brand new, built in the last 2 years. All of your amenities are top class and their prices are high. Investors can invest in these type of properties, but your returns are generally fairly low because they're brand new pieces of property. As you move down that scale to B-class properties and C-class properties, the properties are older in housing stock. They are sometimes run down. They are not, haven't been maintained well. And those properties provide greater impact and greater opportunity for value increases for investors. People still need places to live. People are demanding more places to live. They're moving to different areas, but sometimes they don't want to pay top dollar to live in a place that's brand new. Sometimes they can't afford it if they're a newly married couple, or if they have children, or if they're single people relocating. They just need to move quickly and they need to get a good quality place. So these types of housings stock allow people the opportunity to move and to do what they want. Number 9, wealth transfer. The real estate industry has created more millionaires in the last 6 days than any other business, hands down. It's estimated by the U.S. government that in the next 20 years, approximately $70 trillion worth of wealth is going to be transferred from one generation to the other, with the majority of that being in real estate and hard assets like that in the same category. Starting this program is going to allow you to plan for yourself and your family for future generations on how to do that. That may be something that you've done before in your family, and that's fantastic, and congratulations to you for that. It also may be something that you've never thought of before. So with this program in mind, you will be able to do that and move things forward. The last thing I'll say is, why real estate? Why now? Why wouldn't you want to get involved and learn and get some knowledge and do something of an intelligent level? Be educated and do something for yourself and your family. So it was always a good time to get involved, but it's always now. People can always look back and say, I should have done this back then. I should have done this at another time. Why didn't I do that then? It's better to get yourself educated and try something and do something and move something forward now than in the future. As a closing statement, I would say this. Think about this and ask yourself this question. Why not me and why not now? Don't limit yourself on why you wouldn't be able to do something. Take a risk, be confident in your own abilities, learn and be intelligent about something. Get help from other people, like people in this podcast and others out there who are willing to help you, and let's move your life forward.